Joining us for a conversation is Tim Johnson, the CEO of Granite Creek Copper. Mr. Johnson, welcome to the show, sir.
Thank you, Maurice. It's a pleasure, as always.
What an exciting time to be speaking with you, as Granite Creek Copper has just announced significant resource expansion on the company's flagship Carmacks Copper-Gold-Silver deposit located in the Yukon, Canada. Before we begin, Mr. Johnson, please introduce us to Granite Creek Copper and the opportunity the company presents to shareholders.
Absolutely. So, Granite Creek Copper, we're a one project company at this time, and that is our Carmacks project. And like you said, we're really pleased with the recently published updated resource estimate, 43% increase in contained copper. And we're glad to be advancing it. Granite Creek, we're a member of the metallic group of companies, and that allows us to have a much broader technical support base and investor base, and moving the Carmacks project forward together.
You know, a 43% increase is a substantial update on your mineral resource, but here's what I noted immediately, that 93% of your resource expansion is in the measured and indicated category. That's practically a grand slam. Now, I want to hear more from you. Please walk us through the updated mineral resource, and in particular on some of the high-grade oxide and sulfide results.
Well, yeah, I'm glad you brought that up. There's some things that viewers should note about our deposit, and one is that it is just about all measured and indicated. And the other thing to really note is that around 95% of it is within three conceptual pits. So this is an open pit proposed operation, and for the first time we've included the sulfide resources in the conceptual pits, and we will be going to an updated preliminary economic assessment, a PEA, on those resources, and we expect the economics to be pretty robust. A significant increase in the NPV we're expecting based on what we've seen. And you spoke about the grade, and it is quite a high grade project. I mean, in the oxide, we're running around 0.9% copper, plus our precious metal credits puts us over 1%. And in the oxide and sulfide combined, on average, we are 1.07% copper equivalent. So the economics on an open pit at 1.07% is going to be quite good. One of the best drill holes we did last year in our 21 campaign, we hit 105 meters of 0.97% copper, including a 20-meter intercept of 2.17% copper. So extremely high grade. A lot of fun to be working on. We've got some spectacular core. There are pictures being posted to our website every day, so have a look at some of the core we have. And I invite your viewers and listeners to follow along as we upgrade and restate our preliminary economic assessment that we expect to deliver to the market third quarter of this year.
Now, looking further down the road, can you share with us how the surrounding infrastructure and having a producer next door impacts the value proposition for Granite Creek?
Well, I'm glad you brought up infrastructure, because there's a lot of very interesting synergies with our project. You know, when people hear that we're Yukon, the northern part of Canada, they assume that it's a remote site that's probably fly in, but that couldn't be any further from the truth. We are within 30 kilometers of paved highway, and you can do the conversion for your viewers from kilometers to miles. We're within 30 kilometers of paved highway, and that 30 kilometers is an all-weather road maintained by the Yukon government. So good access into our project. And once you get to that paved highway, it leads through the village of Carmacks, through the capital of Whitehorse, and ultimately to a deep water port at Skagway, Alaska, where there's offtake facilities for shipping of copper concentrate. In fact, the Minto mine, currently in operation just north of us, it's about 20 miles north, they're shipping their concentrate through that port right now. And then the other thing I should note on infrastructure is that the Rio Tinto, you viewers might recognize that name, they invested in a neighbor of ours, Western Copper and Gold, to the tune of $34 million last year. And that project is just down the road from us. So as that project gets developed, that road that leads to ours is going to get upgraded. And basically what we have is we've got other parties, including the Yukon government, building out our infrastructure for us. So that is a huge benefit to a project like ours, because that means we're not on the hook for those road upgrades. We're not on the hook for potential power upgrades, but other parties are. And the Yukon grid that would potentially supply power to our project, it's a hydroelectric grid, so their power is produced by water. It's not a coal or gas-fired grid. So our project is very green energy, very close to power, within 12 kilometers. The takeaway is all the logistics are in place for the development of this project.
But if you thought that that's the end of the story, wait. There's more. Granite Creek is confident that there is a major potential to further increase the scale significantly on the Carmacks deposit, which hosts a vast land package with multiple drill-ready targets to both further increase the resource expansion and new discoveries. Tell us more.
Absolutely. And what you kind of referenced there is a bit of the history of the company. So the company, fairly new, launched in January of 2019. And we started with a significant, highly prospective package, but no resource. Now, in November of 2020, so within 24 months, we had acquired a significant resource. And then in 2021, we launched an aggressive campaign to grow that resource. But we only drilled at that resource. We've got multiple targets in the northern part of our claim block, including some targets that haven't seen any significant work done since the 1980s. But in the 1980s, they were hitting high-grade mineralization, 2.5% over 20 meters. And some of those targets we think are very close to being able to put resources together on them. So this summer, we'll be back in the field. We'll be drill testing some of those targets and determining how many drill holes we need to publish a resource just to add to our already published resources at the Carmacks deposit itself. So very, very keen to get back on the ground and follow up on some of those targets.
Now, leaving the project site, let's look at some numbers. Sir, please provide us an update on the capital structure for Granite Creek Copper.
Absolutely. So we currently have 135 million shares issued and outstanding, 170 million on a fully diluted basis. We have some warrants that are a few of them in the money, but most of our warrants have a strike price of 20 cents or higher. We have about half of our warrant that are issued, about 24 million of them. That 20 cents will expire January of next year. And we've seen some of those come in as the price could drift up above 20 cents. And we believe, based on the current contained metal in our project, that we should be well above of that strike price. So we expect those to come in through the year as the market recognizes the value that we put together in this project, and we drift up in there. The company currently has just under $2 million cash on hand and cash and prepaids. And we are looking to, update the preliminary economic assessment. Our goal is to get to a proposed 15 to 20-year mine life. We believe we have the resources for it. We are working on proving up the economics on those resources. But again, the grade that we have, the tonnage that we have, we expect those resources to be fairly robust. And there's a couple numbers. I'm going to let your viewers do a little bit of math here. Currently, the Minto mine is producing copper for $2.60 a pound underground. At a 1% copper, we estimate that the difference between an underground and an open pit operation is about $1 a pound. Now, the grades are a little bit different. So again, your viewers are going to have to do a little bit of math, but you can understand that we expect our copper production costs to be significantly lower than the $2.60 a pound produced just up the road at Minto, because at their underground, we're going to be open pit.
Now, before we close, Mr. Johnson, what would you like to say to shareholders?
We believe that this is an excellent opportunity for an entry point into the company. One of the value drivers that we see is that our peers and historically junior explorers trade roughly between 1% to 2% of the contained metal, the value of the contained metal on their deposit. We are well below that. We're about 0.75% right now. So we see that as a major revaluation for the company as the market starts to digest the news that we just put out on our resource. And as we move that resource forward to updating the preliminary economic assessment and show the economics of that, we expect a further revaluation. So I encourage everybody to add Granite Creek to their watch list. follow along and see that we deliver on our promises with the resource update and the updating PEA on the way.
Last question, sir. What did I forget to ask?
As usual, you asked all the pertinent questions, Maurice. I appreciate your time. I appreciate the interview. I look forward to talking to you again.
Well, Mr. Johnson, for someone that wants to learn more about Granite Creek Copper, please share the contact details.
Absolutely. Check out our website at www.gcxcopper.com.
And also, you've been very active on the metallic group, I should say, has been very active on making a number of videos. Can you tell us a bit more about that?
Yeah, so we try to put out a video every major news release. We started a series of videos where we talk generally about the markets, commodity prices, and that. So yeah, you can find a link on our website to our YouTube channel, and we encourage you to learn a little bit about the markets and commodities in general.
Mr. Johnson, it's always a pleasure to speak with you. Wishing you and Granite Creek Copper the absolute best, sir.
All right, thank you.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.